All right. Good afternoon, everyone. Welcome to the Valor Financial Specialist weekly training webinar. Today is an exciting training. I mean, every training is exciting. I mean, let's be honest. We can't. We say that every time, but I'm really excited to have everyone on. And today we have F and G. Now. The reason that we do this, I'm going to take care of a couple housekeeping stuff first. First off, as you probably have noticed, I am not Phil Resch. So Phil and I, we've partnered together for the past year and a half, but I run the marketing side of the conversation for Valor. And Phil is traveling. So I'm filling in the gap for today just to get this started. But with that said, as this normally goes, everyone's muted. And the Q&A session, the questions is at the bottom of your screen or wherever you have the Zoom bar. So at any point in time, feel free to, if you have a question as F&G is presenting, just put it in the Q&A section, and we will make sure that we address that before the end of the session. If you have any other questions for us at Valor, you can shoot that over to us as well, or give us a call or shoot us a message as well. But let's get this started. I mean, I'm not going to steal too much of Kieran's fun, and I apologize. Kieran, do I have your name right?
Yeah, I actually go by Curry.
Curry.
Curry is usually what I go by, but I truly don't care. But yeah, it's Curran. Either
Okay,
or.
sounds good. Well, I can do both, but Curry.
Yep.
All right,
You got it.
so that sounds good. Well, Curry is on today. He's got an agenda to go through, but the reason that we do this, as always, is because in every single one of these meetings, there's at least one piece of knowledge that you can walk away from that is going to help your practice. This is why we host these trainings. So on that said, pay close attention. There's lots of things, especially with what's going on, what F&G has to offer that you want in your tool belt. We have this recorded as well, so we'll get the recording out to you afterwards also. But with that said, I'm going to let Curie talk and go through the F&G platform and everything that he has going on. And I appreciate everyone who's been joining on. So with that said, Curie, the floor is yours. And I suppose just to make sure you have I'll just double check that you can screen share and things like that as well.
Okay. Yep. I will. Let's try it right now, right off the bat, just to be sure, and then I'll get going.
Yep, I see the screen.
You see that? All
yep.
right. Wonderful. Thanks, Nathan.
Perfect. Well, then the floor is yours, sir.
Wonderful. Thank you. So thanks for having me on today. I truly do appreciate it. My name's Curry Hoff. I am the senior internal wholesaler here that supports Valor. I've been with F&G now for roughly 6 months. So still relatively new to F&G. I was at another carrier, primarily working with IULs over there as well, before I made the transition over here to F&G. So wide range of knowledge here in the IUL space. Going to do some rearranging on my end here, so give me 1 second. I got multiple screens up, so I'm just going to make sure I have everything set here. All right. Thank you. So I'm going to talk a little bit about the Pathsetter product. As you can see on the screen here, there are a few products that we offer, but the Pathsetter is going to be the main one that you do sell. We do offer the Execudex product, and as well as the Everlast. You know, the Execudex product is simply a product that you might use in a scenario where you don't want to have to go back and forth to the client, because it is technically an insta approval type product. So it would get approved quickly, but there's no true competitive advantage. I think there's only just a standard tobacco and standard non-tobacco rating class for that one. I think I've only seen that place since I've started, maybe once or twice. The Everlast product, that product is essentially going to be used if you're just looking for coverage in older ages and you're not so much worried about cash value, especially if you're trying to run it at a lower rate to be a little bit more conservative. This product might be the product for you, but I'd say at least 95% of the time you're going to be working with the Pathsetter product. So I'm going to hit on the Pathsetter. I'm also going to touch a little bit on our living benefit riders. I'll touch a little bit on our underwriting and what is making that so competitive for us right now. Probably our largest strength when it comes to policies being sold. Right now, I think we're the third largest issuer in IUL sales as far as volume goes with policies placed. I'll talk a little bit about our indexing strategies as well as our foreign national policy. All right, so I touched on the product, but what makes the Pathsetter so competitive right now? First and foremost, I have to highlight the high caps that we're able to offer, as well as the reliable cap history. So right now, our cap is 12%. And if you take a look back over the last 12 years, we have never derived more than 1.5% from that. So from our we have never derived more than 1.5% from our initial offering. So right now it's at 12, and in those 12 years, I think there's been 12 changes, and actually 4 of them have been increases. So even when we have brought it down a little bit, we've always brought it right back up. And then next, our competitive variable loan rate. This is something that we probably don't hit on enough here at F&G, but we actually have a 5% contractually guaranteed cap on our Pathsetter product. So why is that such a big deal? Because we don't know down the road, when your client might want to take distributions from the policy, what the marketplace is going to look like. So giving your client that level of comfort down the road, knowing that it can never exceed 5%, it's a big deal. And I know there are maybe 1 or 2 other carriers out there that have something similar to this, but the difference with them is they don't go below that 5%. It's just set in stone right at 5. If the market allows and interest rates are low, well, we'll certainly go below that 5%. So, you think back just a couple of years ago and 2-3 years ago when interest rates were low, we were certainly in, I think, the upper 2s or the low 3s for that loan rate. So it's possible, but again, that's probably something that we do not hit on enough here at F&G. We also offer a volatility controlled strategy. That's our Barclays strategy. I'm going to get into that as we move on, but the advantage to that is there's no cap. And it also comes with a 170% participation rate. Not to mention a bonus that's added on with no sort of charge or fee or spread. No smoke and mirrors with ours. I know a lot of other carriers have maybe a volatility strategy or a multiplier strategy that comes with maybe a trigger that starts a fee, or maybe just a fee up front. But with ours, we do not have any kind of charge with our volatility strategy. You get what you pay for. So the accelerated benefits, I will also touch on those down the road here. We offer the full spread of chronic, critical, and terminal. And then I mentioned our exam-free underwriting, probably the biggest advantage to what we have going on right now. And that's most likely because we offer actually 100% no exams from ages 0 all the way through age 60. I'll say that again. Ages 0 all the way through age 60, no exam, as long as the initial face amount is $1 million or less. All right, but let's move on to the ins and outs of the Pathsetter. We are able to offer this product at 15 days old for a newborn, all the way up through age 80. We can go down to $50,000 for a minimum death benefit, even at preferred, so we don't have a stop at 100,000 or 150 like some other carriers do. And I touched on our variable loan rate, but we also offer a fixed loan, which is also known in this scenario as a wash loan, because you have that 2% net charges in years 1 through 10, and then that wash in net years 11 moving forward. So another cool thing that we offer with our withdrawals, if your client would like to take a withdrawal, in the first 15 years, we have surrender fees. The client could actually take up to 20% of their cash value without incurring a surrender fee within the first 15 years. So that's really just to kind of give them an option if there was ever any kind of emergency that they may need to look for cash. What better way than their life insurance policy and the cash value within a big bonus there. And then we have a floor of 25 basis points or 0.25%. I mentioned our cap earlier is at 12% with the high cap S&P. So that is our range. But if you note below, we do have a couple of account value enhancements with a few of our strategies. First, we do have one on our high bonus S&P, so that's different than the high cap, but we do offer a separate S&P strategy where you do have the opportunity to earn a 1% bonus. I'll touch on that on the next slide as well. And then that volatility strategy that I mentioned earlier as well, the Barclays Trailblazer Sectors 5, that has a 1% bonus and policy year 2 and beyond. So in addition to that, there's also a 25 basis point persistency bonus, and that comes into play in the 11th year. So keep in mind that all these are stackable. So you start off with your 0.25% minimum guarantee as that floor, and then you have your money in that Barclays Trailblazer Sectors 5 index. You'd be able to go ahead and stack 1% onto that starting in year 2. And then, oh yeah, by the way, we also have that persistency bonus in the 11th year with another 0.25%. So in the 11th year, you'd be looking at 1.5% as your floor in down years. I'll move on to the expense structure. There's not really much to talk about with ours. I think it's pretty standard. I will say that maybe up front, ours is a little more on the expensive side if you're comparing it to other carriers, but I'd also say that it's very a lot cheaper as time moves on and in the latter part of the policy. So overall, there's nothing that's going to catch your eyes with our expense structure. Also, if your client has questions on those, they're more than welcome to go ahead and slap an expense report on the illustration, and you can go ahead and year by year look at the costs and the fees within inside the policy. We do offer a no lapse guarantee period of 15 years. So if the client were to pay the very minimum that the policy would allow the client to pay, we could guarantee that the policy would not lapse for 15 years. I do not have access. Let's see. I'm going to stop there. Let's see if there are any questions. I got to find the chat. I was doing another webinar earlier today and was using WebEx. So this is a little different here. Okay, I found it. Looks like there's one question. Loans, why is there variable over fixed loan rate for a fixed IUL? So A fixed IUL, I guess I'm not sure if you're alluding to just the strategy is when you say fixed IUL, I mean, that would essentially just be a universal life. So feel free to clarify on that. I'm not sure if I'm just misunderstanding, but I do offer two options within the product, both variable and fixed loan rates. But if we do offer a fixed option for a fixed option for a strategy. All right, so like the second question is just asking the difference between the loans and the rates. I'm not going to get into that right now. That's probably a more in-depth conversation. So I will say that we do have a couple of marketing materials that go through the difference between fixed and variable loans. But I know I'm a little limited for time today. So I'm not going to go through. I think it would be beneficial. Feel free to reach out to me when we're done here, or reach out to our sales desk and we can get you some marketing materials or run through some examples with you. All right. So here's a list of all the different types of crediting options that we offer. The top one being that cap, the high cap, which is at 12% and then has an illustrated rate of 7.23. On the previous slide, I also mentioned that we had another S&P strategy with that 1% bonus. Now, as you can see on this one, it does have a lower cap rate. So, for example, if the S&P returned 10%, it would hit that. It would hit the cap of 9%, and you would not be able to feel that bonus. Whereas on the top one, you would be able to get that 10% because the cap is 12. Now, if the S&P returned 5%, this is where it would be an advantage, because if the S&P returned 5, you'd be able to get that 1% bonus, which would then move it to 6. Whereas the top one, 12%, you would just feel that 5%. So in other words, it's a more conservative strategy, probably the third most popular one. The other one I'm going to touch on is that Barclays Trailblazer Sectors 5. So as you can see, this has a 170% participation rate, and it is uncapped. So it offers a 1% bonus, 30 in year 2. So the example for this one, if this returned 10%, it would have a 170% participation rate, which would then jump it to 17% as a return. And then, oh yeah, by the way, there's that 1% bonus. So now we're looking at 18%. At the bottom, our fixed account. This can be reset on an annual basis. I don't think it's changed for quite a while though. It's actually relatively high at 4.75. So if you wanted to not play with any kind of indexing and you just wanted a set fixed amount, you could go ahead and invest a little money, a little bit of the premium going into this strategy as well. We do have a low band adjustments for certain policies that are between the ages of 18 and 45, and then have a death benefit at 150 or less. So I would advise you to go onto your SalesLink agent portal and take a look at those. It offers all the different types of products and what the caps are. I believe for the Pathsetter, if it does fall into that low band rate, the cap is at 11%. So that's the difference between if it were to fall into that tier of being a quote unquote low band, and then a regular policy with that 12% cap. It's just a 1% difference. All right, and then moving on to this slide. Not a lot to talk about here. This is just kind of going through the history of Barclays, and its goal is to really keep it around that 5% target level. So the Barclays Trailblazer has the ability to rebalance its assets daily, whatever they need to get it as they see fit around that 5%. So 5% is going to be the goal. And so that's why it's uncapped. We have seen it in years where it has actually gone pretty high, like 18, 19%. I know that in the last 3 years, it hasn't done as well, somewhere between maybe like 0 and 4%. But when you get that uncapped year where it does really well, it more than makes up for those years of not so great returns. I'm sure most of you are well aware of the S&P index and what that is comprised of. As you can see, it has a return of around 10.5% over the last 10 years. That's going back to 2022, but if you include 2023, I'm sure that number grew just a little bit with the high return for that year, last year. Then our fixed account that we option, this is just your basic. If you don't want to take a lot of risk and you want to be more conservative, that fixed rate is actually pretty high right now. It's kind of, if you do that, you're more entering a contract that feels a lot more just like a universal life contract as opposed to an index universal life product. All right, so I don't see any other questions, so I'm going to move forward to our living benefits. Now, our living benefits seem to be more and more of a reason as to why clients are buying life insurance policies, and more specifically IULs, especially for a scenario like F&G is able to offer, where there's no charge up front for our living benefits. So, with long-term care policies, obviously those are going to be a little bit more expensive. You have to use them in a specific manner, for assisted living or nursing homes or something specific. And with living benefits, you have a lot more flexibility with those. And take a quick drink there. So with the flexibility that's able to offer, you can go ahead and take, accelerate the death benefit, and that allows you to maybe take money out, and maybe you're given, unfortunately, less than 24 months to live, and you want to use that money to travel the world and see things you haven't seen before. It's not specific to certain spending limits like you'd have limitations like you would with long-term care policy. So like I was saying, it's free up front. We actually offer the Pathsetter all the way through table 8. And that is our max. These living benefits are available through table 4. So I'll say it again. We offer through table 8 for the Pathsetter product. These are available through table 4. And then you are able to accelerate up to 100% of the death benefit for actually all 3 of these, with the exception being the chronic illness, but I'll get to that here in a second. So I'll start with the critical illness. The critical illness rider is going to be your strokes, your cancers, your heart attacks. If your client were to suffer one of those, they'd be able to accelerate a lump sum of that death benefit up to 100%. What I'll say is that the more severe the condition, the more money that they are able to get in return. So if you were to accelerate 100% of your death benefit, and which would wipe out your policy, it's probably more beneficial to make sure that it's severe, so that way you have the opportunity to get more money in return when we underwrite at time of claim. The terminal illness, as I mentioned, is if the client were to have expected life expectancy of less than 24 months, with the exception being the state of Florida. In the state of Florida, it is 12 months or less. And I think that's pretty standard with all carriers. I think that's a Florida rule. And then here's the caveat with the chronic illness being able to accelerate up to 100%. You can still accelerate up to 100% of the death benefit, but you would be limited to 25% per year, as long as the client were to requalify every year for that chronic illness rider. But this is your 2 of the 6 activities of daily living. So if the client would be unable to perform 2 of the 6 of those ADLs, or have a severe cognitive impairment such as Alzheimer's is probably the most common example, they would be able to take up to 25% of that death benefit per year. And again, they would have to requalify on an annual basis. Another caveat, as a state caveat, so I mentioned Florida with the terminal illness and being allowed to only accelerate with 12 months or less of life expectancy. The chronic illness has something similar with the state of California, where you can actually take a lump sum up front with this, so you don't have to abide by that 25% rule. So only in the state of California, you are able to choose a lump sum option if the client so chooses. All right, so I think we have some questions here in the chat. Let's take a look. All right, so it looks like there's a question just asking about that 25% for chronic. Again, you can accelerate up to 25% per year of that death benefit up to a maximum, but then in other words, you get 4 years to accelerate up to 100%, right? 25% times 4, 100%. So it would take you 4 years to accelerate up to 100%, but you don't have to. That's simply a choice. If you just wanted to accelerate up to 25% year 1 and be done and keep the rest of the insurance and the policy in force, that is totally fine. That's just an option for you. The one thing I have not touched on yet is the max benefit for these is $1 million. So it's up to 100% of the death benefit, up to a cap of $1 million. So if you did have a death benefit of, let's say 1.5 million, obviously the cap would then be $1 million, and that's for all 3, the critical, chronic, and terminal. And it's based at time of claim also. I don't think I touched on that either. These are all going to be based at time of claim. So let's say you start off with a $500,000 death benefit, and you want to claim these, you want to make a claim 20, 25 years down the road, you would be able to do so. But let's say it has reached, let's say 750,000 of death benefit. If you have an increasing option on your policy, that number would be based at that number at time of claim, not the initial death benefit. All right, any other questions in here on our living benefits? All right, I don't see any in the chat, but if you have some, feel free to throw them in there, and I will get to those. But if not, I'm going to move on to our exam-free underwriting. All right, so excuse me. Philip wanted me to talk a little bit about exams, and when would someone qualify to have to do an exam, and just overall our exam-free underwriting. Guys, this is probably something that F&G is truly ahead of and ahead in the game of as it compares to other carriers. I know Moo and National Life have something similar to this, but we offer no exams, ages 0 to 60 through $1 million, no matter what, through Table 8. So as I mentioned, we have Table 8 all the way through Preferred. Preferred is our best rating. No matter what, if the client is approved at any of those classes, those rating classes, there's not going to be an exam. I know it says 99%, it says over 99%. The only exception to that, the only reason why it's not 100%, is because we've had a few times where a client has been declined by another carrier, and so we would have to decline them as well. But we'd have given them the option to then go ahead and get medicals, get an exam done, and we've said, okay, if this has improved, then we can go ahead and take a look at it and see if we can make you an offer. I don't know that that's ever come through to be an advantage for a client, but we've given them the option. So the only reason why it's not 100% is for the advantage of a client to have the potential to get approved by us that they wouldn't have originally. But that would be at our underwriter's discretion. And then 90% of our applicants that do get approved are approved at standard or preferred. So if you do have someone that's a healthy client and a good potential client for life insurance, odds are they're going to get standard or preferred. And then 50% of those folks that do get approved are approved in 5 days or less. So in other words, if you submit a case on a Monday, by Friday, not only are you going to know if they're approved, but you're going to know what they're approved at. So guys, keep in mind, this is not accelerated underwriting. This is truly exam free. So you're not going to submit a case and then wait 2, 3, 4, 5 days, and then we'll come back to you and say, oh yeah, we need an exam, or no, we don't need an exam. We know right off the bat that the client is not going to need an exam. Some other things that we do ask for at times, the most common one is a phone interview. It doesn't happen every time, but if there's something that is unclear on the application, or maybe the illustration and the application don't mix, maybe they're a little conflicting, or excuse me, the application and what we went behind the scenes to grab, whether it was a prescription check or MVR, maybe something's not matching the application. Maybe we just need to confirm some things with the client. But honestly, this is pretty painless. Rarely do I ever get complaints about phone interviews because they're so flexible. So what happens with a phone interview is we'll have the underwriter reach out to your client initially. If the client is not available, then we will go ahead and leave the number for the client to then call the underwriting team at their discretion. So and our hours are very, very flexible. So the client can go ahead and give us a call whenever they get a chance. They don't have to schedule a meeting or wait for us to call them again. They can be proactive and call on their own time. So typically this phone interview is somewhere between 15, 20-ish minutes. Like I said, it's pretty painless. We do actually have a PDF that shares I should say a marketing piece that you can share with your client that will walk them through what type of questions they can expect from our client, but typically, or from our underwriter, but typically we're going to make it pretty clear up front what exactly we're having, what we're needing more information on. So Usually it's something specific. And then also our non-US residents are able to go through exam-free underwriting. That's very, very uncommon. Typically when you hear non-US citizens, they almost always have to get an exam. With us, they're able to go exam-free all the way up to $300,000. Now, keep in mind, they can still apply for a policy above $300,000. We're not limiting them to that. They would just have to go through and get an exam. You know, let's say they did want $1 million, they would have to go through and do an exam. Also, we're very friendly in the territory of Puerto Rico, and we offer exam-free underwriting for those clients as well through age 45 through $150,000 of coverage. All right, any questions on our exam-free underwriting? I'll give it a moment and see if anything comes into the chat. But I'll go ahead and speak a little bit on our foreign national program here in a second as well, just to give you some more details. So I'll give it another moment here and then I'll move on. One thing that I haven't touched on either is juvenile business. We do a ton of juvenile business. So we do a ton of policies on children. We actually right now have what's called our wizard application, our e-application. So what that does is it allows for approval right when you submit a case on a child. So if you go ahead and do a case on a juvenile, which qualifies as ages 0 through 17, they can actually be approved by the time that you hit submit. And right now, I think we're right around a 50% hit rate on that. So it's definitely working. It's going to automatically move on to the next steps if that's the case. If it doesn't get approved, then no worries. We probably, again, just need some more additional information or something hitting a red flag when we go behind the scenes during the application and grab like script checks and medical records. So don't be alarmed if it doesn't give you an instant approval. They can still be approved. It's just not going to be approved right then and there when you hit submit. But again, we're about at a 50% hit rate on that, so it is working. Another thing with juveniles, juveniles can actually get up to $200,000 without us looking at coverage of the child, looking at the parents of the child. So 200,000 is the max. If they did want to get anything above 200,000, we would then look to see if the parents have at least twice that amount. And I know that's pretty standard, but up to 200,000 without the parents having twice as much. And we won't even bother to look into that. All right, so I'm going to go through some resources here. This is your sales link, which is your agent portal. This is kind of your one-stop shop for everything. I talked about rates earlier alongside banding. You can see that in the top right part. But this is also where you do those e-applications, including the Wizard app. This is where you manage your in-force business. This is where you manage your new business, your pending new business, as well as running illustrations, ordering any kind of marketing materials, which I think is extremely agent friendly as far as ordering forms and materials. But again, one-stop shop for managing your business. But then we also do have another site. I'm actually going to go to this site now. Let's see if I can bring it up here. There we go. if you guys can't see this website for whatever reason, feel free to throw it in the chat that you can't see it, but I think I threw it on the page. Again, I have multiple screens, so I want to make sure. But this website does not need a login, or does not require a login or a username or password. You can get in here, and there is a ton of information in here, guys. You know, all the contact information for all of our different teams. I do want to stop and say that our sales support team is one of the best around. You know, if Jamie or I are out or we're traveling and you can't get a hold of us, we're more than comfortable with you calling the sales desk, and we know there won't be a drop off in service. So that's really cool, because I know it's not like that everywhere. So feel free to, I'll see if I can put it in the chat when we're done. Also, I'll probably send an email off to Philip, who will hopefully get that over to you guys. But up here is website address. If I can put it in the chat. I don't think I can, so not a big deal. Top at success.fglife.com/life-insurance. But moving down, I just want to hit on a few things. First and foremost, we have a ton of client-friendly brochures, and the consumer-friendly brochures are all in various languages. So we offer English, Mandarin, Korean, and Spanish. And then we also have live webinars. So if I click on that, I did one earlier today over our Pathsetter product, and then I also did a bunch of illustration training and some illustration scenarios for agents. But there's a bunch of different things. So I mentioned our new Wizard e-app. Our director of internal sales, and also my boss, Emily Scanlon, is doing one on our e-app next week. So this would be an awesome one. If you guys are not familiar on how to do our e-app, she'll walk through the advantages of it and step-by-step of how to fill it out. So this Wizard app is truly a huge advantage, not only now, but also where we're going, because the hope is for the future, and when I say future, I mean near future, is we want to get adults into approval too. So, you know, I don't have an age range for you yet. That's something we're currently working on, but I know we're working towards getting adults NSTEER approved as well. So when you hit submit at the end of an e-app, we'll know if they're approved. That's what we're looking for and looking into, and we'll hopefully have, I've been told here by the end of the year, I hope that that's still true. I know we're working really hard, because that's going to be a huge competitive advantage for us once that's completed. There's a lot of different ones, guys. There's doing business. There's a sales concept. So go out here and take a look at those. But also there's on-demand resources, so webinars that have already been done and recorded at your own time. You can go in and look at those. A lot of different illustration scenarios. I'm not going to go through all of them, but you're more than welcome to when you get a chance. I did want to touch on our 4 national guidelines, because we are extremely friendly. Oh, those are underwriting guidelines. There we go. Because we are extremely friendly, and we do enjoy non-US citizen business. The most common, so we have essentially 3 categories. I think we used to have 4, but I think we pushed it to 3. Yeah. Okay, so yep, we do have just 3. I'll tell you that category number 2 is the most common for us. So category number 2 involves a non-US citizen that is residing in the United States on a full-time basis. And the cool thing about this is we do not require a social security number. but we do require an ITIN. Actually, we don't even require an ITIN, but we typically would like to have one of those. But if they do not have either one of those, they do have a W-8BN or W-8BN, then we would take that as well. So up in the top right are a list of all the different types of visas that we allow also. But this category number 2 is the most common one that we see. We would just ask for some kind of unexpired photo ID. So the most typical one is some sort of state ID or like a driver's license, but definitely the most common one that we see is a foreign national resident who plans to stay in the United States full time, but unfortunately does not have a social security number. So, but the other options are someone who is in here full time and does have a social security number, and a non-US citizen that is here but is only here part-time. So those are the other categories. Not as common do we see those, but then at the bottom, here's a list of different countries that we allow if they are here on a part-time basis. All right. All right, well, that's all I have for you guys today. If there's anything else, let me check the chat. I don't believe that there is. If there is, feel free to shoot it over now, but Nathan, I can turn it back to you if you'd like.
Yeah,
and I can wait a few seconds to see if there is anything that pops in, or if there's anything else that you'd like me to touch on briefly here. I'm happy to do that as well.
No, well, I will give a second to see if does anybody have any questions. But as we're waiting for that, let's see. I see the question, the Q&A. I'll be honest, I wasn't completely paying attention. But what did you answer those? Like Tiffany's for loans? Why is it available for 6 loans?
Yeah, I would. Yeah, it sounds like that's kind of more of an example. I guess the advantage for the difference in loans would be the variable loan is definitely the most common type of loan that you see used because it is participating. So the client has the ability to earn money with a variable loan, but fixed loan is probably the second most common. There's just no kind of charge on the back end with those. But I wasn't going to go into an example because I didn't have one off the top of my head. But Tiffany, if you want to go ahead and reach out to me when we're done here, I can share some marketing materials with you. Or if you want to call our sales desk, if I'm not available, they can go ahead and walk you through those as well.
That sounds good. And same thing with why would there be Tiffany, reach out asking the same thing about the difference in rate for loans and things like that. What's the advantage?
Yeah, I would just go ahead and reach out to me when we're done here.
And then same thing, Farhan, with the example for critical illness, it says up to 100% for critical, only 20% for chronicle.
Mm-hmm.
I know you guys have documentation on that and examples within your illustration.
Yeah, I touched on that as well, that question. I mentioned up to 100%, but it said 25. The reason being, you can accelerate up to 100%, but the most you can get is 25% a year. So in other words, it would take 4 years to reach that 100% of the death benefit. So if you had, I don't know, let's say $1 million of death benefit, and you want to accelerate up to 25% per year, you'd accelerate 250, 250, 250, and then the 4th year you'd reach 250 and use up the rest of your death benefit.
That makes sense. Well, the only other comment that I'll make is I have 5 kids, so that 200,000 without checking full, that was something that perked my ears, because I know when I was writing policies, the one family that I wrote had the biggest one that I wrote from a family standpoint had 12 kids. And we wrote all of them up, but something like that of having where it didn't you didn't have to give everyone the same amount. Like that's a great sales concept. So if anybody knows anybody with families with children, just to get the children insured, that's a phenomenal concept to use F&G for. But
Perfect.
with that security, I really appreciate the time. Again, everyone, this is recorded, so we will get the recording out and save it on the YouTube channel. If any other questions do pop up, or have any policies that's going to make a fit, then you know who to contact.
Perfect. Well, thank you for having me. Thanks again. Like I said, if you do have any questions, feel free to reach out. We're available at any time. Okay.
Thank you so much, Gary. You have a great rest of your day, and appreciate you jumping on and sharing the knowledge.
You bet. Thanks, Nathan. Take care.
All right. Bye-bye, everyone.